Did you know that according to Cathie Wood, Tesla stock will be impossible to buy after a huge thing happens? A lot of people in the investing field heed Wood's words, as she has an established reputation for being a good investor. Keep watching to find out what Wood meant when she said that Tesla stock will be impossible to buy. When experts have differing opinions about a certain matter, it is quite difficult to make a sound major decision. While other investors are extremely concerned with the Tesla stock dip today, several remain confident in their investment in the electric vehicle company. In today's video, you will see why Cathie Wood said that Tesla stock will be impossible to buy after a certain thing happened. Investment companies carefully consider the company's stocks or bonds before investing in them. The economy and stock market are also considered before coming up with a sound decision. Tesla stock is one that analysts and investors keep their eye on, its progress and movements. Even though Tesla stocks have constantly been fluctuating, investors are still clamoring to buy in stocks since Tesla is said to flourish more from here on. That said, Ark Invest recently updated Tesla's valuation model with a $4,600 price target in the best-case scenario for Tesla stock in 2026 and up to more than $20,000 by 2030. Ark's updated open-source Tesla model yields an expected value per share of $4,600 in 2026. The bull and bear cases, tuned to the 75th and 25th percentile Monte Carlo outcomes respectively, are approximately $5,800 and $2,900 per share. Ark Investment Management LLC, or simply Ark Invest, is an American investment management firm based in St. Petersburg, Florida, that manages several actively managed exchange-traded funds. Ark Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. The company also invests in innovations like self-driving cars and genomics, which explains why they are keeping an eye on Tesla. As of February 2021, the company had $50 billion in assets under management. Ark Invest's CEO and CIO Cathie Wood is an American investor, a star stock picker according to Forbes, who is often called the most underrated investor in the game since she is incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. In Ark's 2021 open-source Tesla model, they outlined their expected value of $3,000 per share in 2025. However, they updated this stance due to material changes including autonomous ride-hail assumptions and inputs, capital efficiency estimates, and the forecast has been pushed forward by 1 year to 2026. According to Ark, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. Ark Invest's updated model also increases Tesla's capital efficiency. Tesla's capital expenditure per incremental unit of capacity had improved from around $84,000 in 2017 when the Model 3 was ramping up to around $7,700. In last year's model, they estimated that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. Given its much better than expected capital efficiency, it may be safe to assume that Tesla will spend $2,000 to $7,000 per incremental unit of capacity in 2026. Ark's price target for Tesla is $4,600 per share in 2026, with the updates in their recent model. The bear and bull case suggests that Tesla could be worth roughly $2,900 and $5,800 per share in 2026. If this happens, Tesla stock will be impossible to buy for any average American and will be made available only for those who are already at the top. Through his employees, Tesla Inc. CEO Elon Musk said that he agreed with Cathie Wood when she stated that Tesla is worth $3,000 per share if they perform well. It can be noted that Wood stated in a recent interview, as was earlier mentioned, that her base case on Tesla is around $3,000 a share, and continued to say that their estimate for Tesla's success has gone up. She explained that this is due to their market share that went up dramatically instead of going down, despite other companies' ventures into the electric vehicle industry. Ark Invest believes that Tesla will be able to produce at least 5 million to 10 million vehicles as early as the year 2025. Musk explained that if the company executes well and indeed will have a price tag of $3,000 per share, it will make Tesla's valuation at around $3 trillion, making it the world's most valuable company. As of today, Tesla is hailed as the world's most valuable automotive company with over $730 billion worth. Don't forget to hit the like and subscribe button to see more Tesla stock content from us. Mark Delaney, a Wall Street analyst at Goldman Sachs, also increased his price target for Tesla stock in January 2022 to $1,200 from $1,125 while maintaining a buy rating. He also named Tesla a top pick for 2022 and called it the best idea in the EV sector. He further stated that Tesla holds the leading place in EVs. Although this does not seem much, this increase is only for this year, so who knows how much it will increase in the next few years. Even Piper Sandler Companies, an American independent investment bank and financial services company, raised its Tesla price target to $1,350. Piper said that it expects Tesla to generate more cash since the stock has potentially more worth. Another renowned Tesla bull, Morgan Stanley's Adam Jonas, stated that the current landscape for EVs is a race and Tesla has been winning so far. He compared the EV industry to a marathon and said that Tesla leads at mile 21, while other companies are still at mile 2 and others are still tying their shoes, figuratively speaking. He supported this claim by explaining that recent records of car deliveries are proof that Tesla's position remains strong and is becoming stronger as the marathon progresses. He also revised the price target for the automaker shares to $1,300 from $1,200 and proceeded to predict that the delivery figures would reach 2 million this year. Regarding cash flow, Morgan Stanley estimates that Tesla will generate approximately $9 billion of free cash flow in the present year and thus rise to $27 billion of free cash flow by 2025. Why buy Tesla stock? According to a recent article published in Barron's Magazine, an American weekly magazine newspaper covering U.S. financial information, market developments, and relevant statistics, now is a pretty good time to buy Tesla stock. Although some analysts foresee a crash and others expect gains of more than 100%, the debate is far from settled. But two metrics make shares of the electric vehicle leader look unusually attractive. Analysts say the average price target is about $984 for Tesla shares, implying gains of about 35% from recent levels. The last time the metric looked that good was in March 2020, when the market sold off as the pandemic hit the U.S. Dave Lee, a known YouTube content creator whose channel tackles all there is to know in investing, is also known as a Tesla bull and enthusiast. He recently shared a post saying how he raised his initial Tesla stock capital for about 100 times their actual worth. He shared that when he originally bought Tesla stock, he expected it to expand 10x, from $3 billion to $40 billion in market capitalization. Lee then stated that history could repeat itself. According to him, people are misinterpreting Tesla the way they misinterpreted the original iPhone. He firmly believes that Tesla is just getting started while embracing complexity through innovation. The famous YouTuber investor expressed his surprise with how his Tesla stock expanded 100x within 8 years of holding common stock. Because of this, he believes that the stock has the potential to go higher, perhaps or hopefully 100x more in another 8 years. Although some investors lost faith in the company and decided to sell their stocks, Tesla exceeded all expectations, even that of Wall Street, and continued to perform well. Ronald Stephen Barron, an American mutual fund manager and investor and founder of an investment management firm called Barron Capital, said that Tesla comfortably surpassed Wall Street's expectations of $2.20 to $2.30 per share and $18 billion in revenue. Moreover, Tesla's operating profit of about $1 billion is greater than what analysts expected it to be. This resulted in Tesla shares increasing by 5% in after-hours trading to $1,017 per share, which is a significant increase from around $976 at the close. As earlier mentioned, analysts and investors have differing opinions on Tesla's current standing in the stock market, but a lot of them remain bullish and believe that the stock is a good long-term investment. However, if the price per share of Tesla stock is to become $3,000 as predicted by Cathie Wood, it will be impossible for average American people to own a share of the leading EV company. For more Tesla stock content, watch our other videos.